All right, guys. Hey, here to help us, the investment pros. We've got Jim, Matt, and Hillary, and we're also joined by Jim. We've heard this, though, for a couple of years, right, that the profit growth is going to be mitigated. There's just so much more you can go up, and that margin expansion has hit its logical levels. We've heard this, and yet it's kind of going on, even with some engineering, of course.
That's right. I mean, I think we've talked about certain companies being priced to perfection, and I like what John said about rates. Even with the Fed moving rates, I think we're going to be in a backdrop that's very positive still for the equity markets because we're going to have benign interest rates. To me, it's about geopolitical risk now. With the markets closed today, it was about Greece, it was about the ceasefire in Ukraine, it was about oil supply being hit, Libya, Egypt getting to the fight. That's what took my focus today since the U.S. markets were closed.
Yeah, we count that ceasefire in hours in Ukraine, right, Jim?
Well, again, I agree with the more aggressive tint towards stocks. I'd also say that in an environment where fixed income is really, the rates are killing savers. There's no return in CDs, and actually even fixed income itself is offers very little yield. I actually like dividend plays in the stock market. So even my extra investments in stocks are giving me income.
I'm 25. I got a job. It's paying pretty good. Jim, you know this company.
Yeah, I mean, they're having trouble. Their margins are being squeezed. And so their strategy right now is really purchasing power. And that's the whole thing with U.S. foods. They're just trying to be the biggest kid on the block. I was actually at an international food event, and their Sysco was actually also trying to be a big player on the global.
But this wasn't in America.
I was over in Dubai for this event, and it was amazing to see Sysco as really a dominant player in this space. So, again, big purchasing power is what they're going after.
And they've been making a lot of acquisitions over the last few years. All right, guys.
No, my issue there is, as you said, it's a punitive tax on the poor. It almost preys on the poor, on the less educated. They also play for the wrong reasons. They're playing to make money and not to have fun with it.
No, that's Atlantic City and Las Vegas.
No,
this is about spending a
buck. No, it's not. It's a disproportionate amount of poor and uneducated people play the lottery, and they do it for the wrong reason. So I agree. It's a bad. Actually, I'm down on the lotteries right now.
I will tell you.
I went with Daktronics. We're infatuated with flashy designs. They make video equipment, audio equipment. They're in so many stadiums, the biggest screens, the Dallas Cowboys, Yankee Stadium, and I think the stadiums are trying to bring the flat screen experience to the arenas, and they're a unique maker.
So our fascination with flashing lights, you say we can make a lot of money on.
Make a lot of money. Not a huge company from a market cap, but limited competition and expanding clientele.
Hillary?
I mean, for real estate, again, I think there is a commercial use for it, but to Matt's point, it's not for deliveries. So whether it's speculating on farmlands, for real estate to take pictures, and then for a recreational, we'll call it a toy, that'd be a fun thing to have for Christmas.
I think it's going to be bigger than a toy. I mean, this thing, I think the implications are larger than that.
iPhone's a toy. That's a pretty good toy out there. There's a big market for that.
I love their product pipeline, guys. I just think that they're spot on. They already know when they're going to introduce all of these things. They've got dates. I think it's going to be phenomenal.
They got over 200 projects that they've invested in, so they are innovative. 36 years of dividend increases, so they're a good income producer. And to finance this acquisition, $17 billion of debt at a 20-year maturity. They tapped a unique place in the market, so I think they got a good, strong balance sheet to go forward.
John, what do you think, Jim?
Look, I mean, no amount of money is going to protect firms from cyber attacks. The increases are up about 200%.
So spend no money on it?
No. But to Hillary's point, more money is going to get spent, and bigger is going to be better because the bigger companies are going to be able to protect themselves a little better, or a lot better, I should say, than some of these smaller guys.
I just think because Jim always tells me they said I don't think. How do you read that, Jim? How do you know?
Very slowly.
All right, guys. Hey.